To run गवर्नमेंट नीड मनी. सरकार चलाने के लिए मनी चाहिए, क्योंकि मनी के थ्रू से इलेक्शन हो, हेल्थ, एजुकेशन, those things require money. How the government earn money? Through tax. Mainly government earn taxes more in wine and tobacco, another one petrol or diesel. These things. These two things are not good for health. It impact on health. Smoking. Impact of smoking. Due to smoking, what happen? Cancer. And another one, lungs damage. Those things happening. And people struggle in poverty. Much more things. Families suffer a lot for hospitalization. Huge amount of money required to cure cancer. For eradication that, government impose high tax on tobacco. That one implement on 1st February 2026. The ministry also notified that provisions of Health Security Say National Security Act 2025, which intends to levy a cess on pan masala units, will come into force from February 1. यहाँ पर हेल्थ सिक्योरिटी से नेशनल सिक्योरिटी एक्ट 2025 मुताबिक जो टैक्स लगा गया है वो फरवरी 1 से इम्प्लीमेंट होगा. In an accompanying FAQ note, the ministry explained that under the Goods and Services Tax (GST) regime, the excise duty on cigarettes had so far been rendered a nominal amount of a fraction of a paisa per cigarette stick, and the GST compensation cess rate on tobacco products had not been increased since it was implemented in July 2017. 2017 से GST बढ़ा नहीं था. For India, affordability has either stagnated or increased in the past decade, meaning cigarettes have not become more expensive relative to consumers' purchasing power. The note said this contrary to global public health guidance, which emphasizes annual increase in specific excise duties to ensure that real cigarette prices rise faster than incomes. At the same time, the ministry notified February 1st as the date from which the GST compensation cess would cease to exist. The cess was originally introduced for a period of 5 years to compensate states for any loss arising out of the implementation center's tobacco tax regime to take effect from February 1. Finance Ministry announces end of GST compensation cess, BDs in 18% slab, other tobacco products in 40% brackets as government bids to ensure that real cigarette prices rise faster than incomes. The Union Finance Minister on Thursday issued a series of notifications that will give effect to the new taxation regime for tobacco products from February 1. The Central Excise Amendment Act 2025 passed in the recently concluded winter session of Parliament specifies now rates of excise duty on tobacco products. The Finance Minister has notified that provisions of the Health Security Say National Security Act 2025, which intends to levy a cess on pan masala units, will come into force from February 1. BDs have been moved to the 18% GST category from the now defunct 28% slab. किसका? बीडी का. All other tobacco products have been moved to 40% slab. और अदर टोबैको प्रोडक्ट्स 40% स्लैब को चला गया है. The GST compensation cess was to end 2022. However, due to the COVID-19 pandemic, the cess collection were not enough to compensate the states, and so the center borrowed money to compensate them. Hence, it was extended until 2026, with the proceeds being used to repay the loan. With the impending end of the loan, the center on September 22, 2025 removed the incidence of the cess on most items except tobacco items. From February 1, 2026, the cess will no longer apply on these items, either effectively ending it. Finally, the ministry introduced a new valuation mechanism for tobacco products such as chewing tobacco, filter, khaini, jarda, scented tobacco, and gutka, whereby the GST value would be determined based on the retail sale price declared on the package. Regarding the Health Securities National Security Act 2025, the ministry justified the inclusion of the national security aspect by saying that conventional tax revenues cannot always guarantee funding for national security functions, and so a dedicated cess is needed for the purpose. General tax revenue are subject to competing developmental priorities and cannot always guarantee sustained long-term funding for core national security functions. The FAQ note said, a dedicated purpose specific cess enables the union to create a non-lapsable, predictable financial stream that supports multi-year security preparedness, technological upgradation, capacity creation, and advanced equipment procurement without increasing the tax burden on the general population or raising broad-based rates such as GST.